we have seen more than once that market sentiment is prone to quicksilver changes. Yesterday, the euro did not signal any radical changes. No one foresaw today's events either. The single currency consolidated in a narrow range, under pressure from the US dollar until the data on the unemployment rate in the Eurozone was released. Moreover, no one expected anything like this from this indicator. The jobless rate inched down from 6.5% to 6.4%. This unexpected decline in the unemployment rate became the reason for the confident growth of the single European currency. We remind you that we prepare for you a regular traders calendar with the announcements of the most important economic reports several days in advance, as well as the possible impact on the US dollar and the popular currency pairs. Back to yesterday's adventures of the euro, the single currency lost its footing again starting from the early New York session. As a result, the euro-dollar pair pulled back almost to the levels at which it opened trading on Thursday. Besides, the US dollar found itself without much support from its domestic statistics. As reports showed, the second estimate of the US GDP was even weaker than the first. After 1.6% in the first estimate, the figure was downgraded to 1.3%. Most likely, the US dollar found support in the growth of the GDP price index, the so-called deflator. This figure exceeded the forecast and rose by 3.1% in the first quarter. This was a hawkish signal to the market and encouraged the strength of the US dollar. At the same time, a sell-off in the US Treasuries as well as shares of high-tech and consumer services companies sent Wall Street lower. As a result, the S&P 500 index lost more than a half percent yesterday. And today, it's also trading lower within the intraday corridor of 5,222 to 5,260 points. On early Friday, as we see, the greenback also calmed down a little. After yesterday's two-week high, its price relative to the six peers from a basket of currencies settled in a narrow range of 104.6 to 104.9. However, this quiet trading was disputed by the Eurozone statistics. In addition, the market is alert to the crucial report on inflation in the US today. The PCE price index is known as the preferred inflation indicator of the Fed Reserve. The consensus suggests that its underlying component will remain at the same level at 2.8%. But any deviation from this figure will provoke a wave of volatility in the forex market. By the way, inflation data for France published today, as well as data for Germany and Spain published earlier this week, were slightly higher than expected. These figures could cement expectations that the ECB is ready to begin rate cuts as early as next week. All 82 economists polled by Reuters predicted a rate cut in the euro area as early as next week, on June 6. However, most of them also projected more rate cuts in September and December of this year. In the first half of the trading day, the euro-dollar pair got stuck between 1.08 and 1.09 and showed speculative activity from time to time. Our analysts assume that the period of this sideways trading is coming to an end. In this situation, analysts advise paying special attention to breakout of the borders of the established range. Indeed, if the price goes beyond the indicated resistance and support, a new stage of activity in the euro will follow. However, there is still some time until the range-bound market is over. The reason for this sideways trading was most likely the forecast for CPI rates published today in the euro area. The annual CPI in the euro area jumped to 2.6% for the first time in 5 months. That's the index in May exceeded not only the previous 2.4%, but also the forecast of a 2.5%. No wonder the inflation report led to fairly strong growth of the single European currency. While the euro bulls are celebrating the small victory, oil traders, on the contrary, had an excuse for a major disappointment today. Overnight, Brent crude not only fell to $82 per barrel, but even went slightly below this level. The reason was data on the US gas inventories, which increased by 2 million barrels last week. This is despite a decline in crude oil inventories of 4.2 million barrels. Importantly, the price moved rapidly from the upper border to the lower one and broke out. So, volatility in the oil market has increased sharply. It was an expected move because the Brent price has been unable to escape from a narrow corridor for whole months. It seems that oil prices are trying to find a new equilibrium point. The question is still open, whether the price will move up or down. After all, the fundamental factors that determine the conditions in the oil market remain the same. Hence, now any news, economic or political, can throw the market out of balance and trigger high volatility. You have watched the Market Review by InstaForex TV channel for Wednesday, May 29. Subscribe to InstaForex and we keep you updated on all market developments. Feel free to ask any questions and leave your comments, and see you online tomorrow.